The financial world has been rattled by a significant market downturn, dubbed the Trump Slump, by the international financial press. This term emerged following dramatic stock market declines on March 10 and 11, 2025, reflecting deep-seated concerns about the American economy's stability and future trajectory. The severity of these market movements has prompted careful analysis of the underlying factors driving this economic turbulence. Three critical factors have converged to create this market decline. First, there's the fundamental instability inherent in capitalist economies. The National Bureau of Economic Research has documented a consistent pattern of economic downturns occurring every 4 to 7 years throughout capitalism's 300-year history. These cyclical crises manifest in various forms, from minor recessions to major depressions, despite numerous attempts to stabilize the system. Notable examples include the devastating Great Depression of the 1930s, the 2008 Great Recession, and the 2020 COVID crash. The Federal Reserve Bank of Atlanta's recent forecast adds weight to these concerns, predicting a 2–3% economic contraction in 2025, which translates to approximately $1 trillion in lost economic output. When President Trump appeared on television on March 9 and couldn't definitively rule out a recession, it triggered immediate market reactions, with investors rushing to sell their holdings as markets opened on Monday morning. Technology stocks, traditionally considered among the most robust sectors of the U.S. economy, suffered particularly severe losses. The timing of this potential recession aligns perfectly with historical patterns. Coming 5 years after the 2020 COVID crash, it falls squarely within the typical 4 to 7 year cycle. While Trump didn't create this systemic instability, his administration now faces the consequences of these deeply rooted economic patterns. The cyclical nature of these downturns has proven resistant to various policy interventions throughout history, suggesting that any short-term fixes may provide only temporary relief. The second major factor is the erratic and unpredictable nature of Trump's economic policy making. His administration's approach to international trade, particularly regarding tariffs, has created significant uncertainty in the business community. The constant fluctuation in tariff policies affecting Canada, Mexico, and European trading partners has made it extremely difficult for businesses to make long-term investment decisions. Companies face the difficult choice of whether to relocate manufacturing facilities based on tariffs that might change without warning or clear rationale. This policy inconsistency has created a paralysis in business planning and investment decisions. Wall Street veterans emphasize that such uncertainty can be more damaging than a predictable downturn, as it prevents businesses from making confident decisions about hiring, expansion, or capital investment. The third crucial factor, and perhaps the most fundamental, is the declining position of the American empire in the global economic order. This decline is evidenced by a series of military setbacks, including unsuccessful campaigns in Vietnam, Afghanistan, Iraq, and ongoing challenges in Ukraine. These failures represent more than just military defeats, they signal a broader shift in global power dynamics. China's economic ascendance provides the most striking evidence of this change, with its economy consistently growing at 2 to 3 times the rate of the United States for the past 3 decades. The BRICS alliance, with China at its helm, now represents a larger economic bloc than the United States and its G7 allies combined, a dramatic shift from the post-World War II order where American economic dominance was unquestioned. The United States maintains approximately 700 military bases worldwide, far exceeding any other nation's global military presence. However, this military footprint no longer translates into the same level of economic and political influence it once commanded. This decline in relative power affects investor confidence and market stability, as the United States can no longer guarantee the same level of economic security and returns that attracted global investment for decades. The market's response to these factors has been swift and severe. While some might suggest that potential tax cuts for businesses and the wealthy could stimulate economic recovery through Trickle-down economics. Historical evidence suggests such measures typically result in concentrated wealth accumulation rather than broad economic benefits. The benefits tend to remain with the wealthy and powerful, who have proven adept at maintaining their economic advantages. The term, Trump slump, thus encapsulates more than just a temporary market correction. It represents the convergence of multiple systemic challenges: the inherent instability of capitalist economies, the uncertainty created by erratic policy making, and the fundamental restructuring of global economic power. These factors create a perfect storm of market instability that may persist beyond any short-term fluctuations. This market decline signals a potentially significant shift in the global economic landscape. Investors, both domestic and international, are increasingly recognizing these fundamental changes, leading to more cautious market behavior and potentially prolonged volatility. The situation requires a deeper understanding of these structural changes rather than simply hoping for a quick recovery through traditional economic interventions. The combination of these factors suggests that the current economic challenges may be more persistent than previous market corrections. Understanding these underlying dynamics is crucial for anticipating future economic developments and their implications for both domestic and international markets. As the global economic order continues to evolve, the United States faces the challenge of adapting to a new reality where its economic dominance can no longer be taken for granted.